Well, if you've not heard, let me tell you, today the Fed made a decision to lower the interest rates by a quarter of a point. So what does that mean for you? Well, first of all, our Fed, they suck, okay? Because we were looking for at least a half point improvement, but they suck. They're more political than they are anything else. They're trying their best to hurt the Trump administration, and in the process, they're hurting average, ordinary Americans. But what does this mean for you? Well, what happens is when they lower these rates, this is the federal funds rate. It's the rate at which banks borrow money from the federal government, all right? So that has a trickle-down effect to everything else, including mortgages. And what you're going to find is that the mortgage rate does either get adjusted ahead of time, so the investors build that into their rate sheets and their pricing, or very quickly after the announcement's made, you'll see some pricing adjustments. So it wasn't any kind of big earth-shattering news that we were hoping for. Personally, I want to see the Fed chairman get the axe. I want him gone. We need new leadership in our Fed. Okay, so going forward, what I want to tell you is, despite the economic news, despite what's happening with interest rates, it's still a great time to get into a new home or to refinance an existing home. Look, let's talk about refinancing first. Americans are deep into credit card debt, okay? I don't have the number right in front of me right now, but the average American has a huge amount of revolving debt as they've been trying to survive in the last several years with the economic turndowns and all the other stuff that's going on. So when you look at interest rates, and you may have a great rate on your house, but you want to look at something called the blended rate, okay? That's where you take all the interest that you're paying, blend it together, and see how much it's going to save you a month. Rather than just focusing on the rate for your mortgage, you need to look at the rate of what you're paying on all your indebtedness. And it may be that it's time to talk about refinancing to get your family in better financial shape. Of course, when rates do improve, which we're hoping we'll see that, then we could refinance again and lower those rates even more. For those of you that are looking to purchase a home, whether it's your own primary residence or you're looking for a secondary home or investment property, it's still a great time to get in the market, and I would say do it now. What I'm seeing here at the end of September, the latter part of September, is I'm seeing a lot of people jump into the market, okay? My number of applications have been going up, and with that, there's people out there shopping for the same houses you'll be shopping for. So if you wait around and you don't nab a house now, chances are you're going to have slim pickings later, because low rates mean higher housing prices and less availability of houses. So now's the time to make those moves and get yourself in a better position. If you buy now at a higher rate, as long as you can afford it, you can refinance that later. If you want to know more about that, reach out to me. My contact information is right here, and I'd be glad to talk to you more about this in detail. God bless you and have a fantastic day.